James Walker-Powell, and it's Fund Manager Friday again. And we've got Daniel again, okay, from Schroders. Daniel's going to be talking this Friday about their Real Return Fund. What does Real Return mean, Daniel?
So, put simply, we, instead of saying we are going to give you a return plus or minus a benchmark, we wanted to give you an actual amount of money. So what we're trying to do is deliver inflation plus 4 to 5% to your clients. In doing that, we're trying to do it with a small amount of risk, which we measure in volatility. So we don't want two things. We don't want to lose all your money, and we don't want the road to that return that we're trying to achieve to be too volatile.
So how's the investment approach different from, say, an index fund?
So an index fund, just using equities as an example, an index fund will give you access to, it'll allocate more money to the bigger investments.
Right.
The way that we would look at, say, the equity portion is to give money to the companies that we think are likely to perform better regardless of their size.
Okay.
Yeah, that's the simple version.
Okay. And who should use a Real Return Fund?
Well, there's a few ways that these funds can be used. Typically, they are used as a defensive alternative.
Right.
How the fund was designed was to be a core portfolio. So the Real Return Fund that we run actually invests in multiple asset classes at once. So instead of picking XYZ manager for Australian equities and a couple of managers for global equities, we say, let us allocate all of that. Now, the benefit there is that it might be time to deallocate from US equities and reallocate into, say, Japanese equities. We make that decision.
Let me ask this question, okay? Today, where's that money being invested in the Real Return Fund?
There's a lot of investments in the Real Return Fund at the moment. The largest single investment right now is in global equities, of which the largest allocation in that is US equities.
And?
The other largest investment is on the credit side, so that's the debt side of the balance sheet, in Australian investment grade credit, so low risk Australian credit.
And how many companies would be in that credit pool?
The credit pool will have thousands.
Right.
Yes. The equity portion will have hundreds.
Fantastic.
Potentially up to hundreds. Yeah. Yeah.
Real Return.
Real Return, yes.
There you go.
Yep.
Well, it's James Walker-Powell, Fund Manager Friday. We'll see you next week. Cheers.
Thank you.